All right, guys, back to work. It's about that time of day again. Thursday evening. It's July the 15th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trade setups for tomorrow. Not just any Friday, Summer Friday, Third Friday, OPEX Friday trading session. Got a great video in store for you guys and gals tonight. Charts are already in the background, as you can see. S&P's here. Nasdaq's here. Oh, yeah, gold is definitely ready on my radar for tomorrow. Glad to see you are right here along with us. Boy, get a bunch of great trades on our radar for a Friday trading session. We expect to see some big news tomorrow morning. We'd like to see an uptick of volatility as we go into options expiration. And boy, I'll tell you, some big moves down today on the Eminis. Got some ranges on the gold. Boy, I can see a ton of buy setups, short setups, breakout setups, failure setups. Not to worry, by the end of this video tonight, you'll know my favorite price action setups for tomorrow. That way you can capitalize on the best trades and stay out of trouble, right? Avoiding all the rough spots tomorrow, whether you're trading on your own or you're trading with us in the trade room. But before we jump into the video tonight, though, as always, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. I publish this video every evening with my best trade ideas for the following day. I don't want you to miss, not tomorrow night's, but Monday evening's video newsletter. So make sure you subscribe to our YouTube channel. And if you guys have any questions, drop those questions for me. I would love to answer all your questions. Don't be bashful in the comment section. And as always, I appreciate you guys tuning in every evening. If you enjoyed this video as much as I enjoy making it for you guys, do me a big favor here. Hit that like button, that thumbs up button for me here on this YouTube video. But don't forget to subscribe. I don't want you to miss our next video newsletter. But enough of the intro. Time is ticking. Friday is right around the corner. Can't believe we're already talking about the third week of Friday. My goodness. S&P, Nasdaq, gold, we're all here. The whole gang is here together here tonight. What do we got going on right now? A lot of bears in the market, right? A lot of bears in the market right now. Bearish on the S&P, bearish on the Nasdaq. We get some ranges involved, right? And so ranges are going to play a little bit of a role, well, more than a little bit, a lot of the role in our strategy for tomorrow. I'll tell you, a lot of really good short setups on our radar right now. Would love to short this S&P on the way back down. I wouldn't be afraid of shorting it as it pops higher. Same thing on the Nasdaq. Would love to get short here as we make another leg lower. Even if we do pop higher here, I still see opportunities to short this market right now. And of course, you know me, right? You know me. I will absolutely address reversals here tonight because we've still got that range up top on the E-mini S&P. We've still got that range up top on the Nasdaq. So there is definitely potential for a major reversal tomorrow, and I will make sure you guys know exactly how to qualify those reversals, how to capitalize on them. Gold might be maybe not the easiest one, but gold's kind of the simplest of the group here tonight. We're bullish into a range on the gold right now. That range will act like a magnet, right? So we're trying to sell as the market goes higher. We're trying to buy as the market goes lower. At the same time, though, we do have potential for a major failure right now on the gold and a big drop off these highs, especially if they fail to retest the highs. And of course, we heard from Powell this week. It wouldn't surprise me as everyone's talking about inflation continuing here. Janet Yellen said at least a few more months of inflation. So you got to have the long side trades on your radar for tomorrow as well. I don't care what direction this market goes. By the end of this video tonight, you'll know my favorite setups no matter what these markets throw at us on OPEX Friday. Before we jump into these charts, though, here, let's just make sure we're all on the same page. I keep talking about the third Friday of the month, and that is exactly what we're going into tomorrow morning. Now, tomorrow's a Friday, right? Usually Fridays are going to be a smaller window of time. I always try to find my trades on a Friday morning before 11 o'clock Eastern time. You got to have a good reason to be trading after 11 o'clock on a, not just any Friday, but a summer Friday market. I would be watching that 10:45, right? 10:45 a.m. Usually what happens on a summertime Friday is the market will slow down about 10:45 to 11 o'clock, 11:15. So you want to try really either to make your money before 10:45 or really wait until kind of that afternoon push. That usually comes about 11:45, 12 o'clock, 12:15. It's kind of a moving target, but there's usually kind of a lull in the action between 11 o'clock and 11:30, 11:45, right? That classic lunchtime slowdown. There are opportunities in the afternoon, but I'll tell you, on a Friday afternoon, the markets are not very consistent. We are not at our sharpest on a Friday afternoon. So I'll tell you the same thing I tell all of my clients every Friday morning in our trade room. Let's make that money early, right? Earlier the better, and then get out and enjoy some of the beautiful weather hopefully you guys are having around town, wherever you guys are tuned in from. So early in, early out. If you trade in the afternoon tomorrow, be careful. Again, make sure you are really disciplined because it's easy to give back money late in the day on a Friday. Big news tomorrow, of course, is the retail sales number at 8:30 Eastern time. Retail sales have been popping big time over the past few months, most likely fueled by stimulus. We'll see if the inflation has chewed away into these kind of the retail demand. We'll see if that number has any pullback here tomorrow, and that could be a domino that definitely affects these markets tomorrow. A really disappointing retail sales could easily lead to big drops or bigger legs going lower on the Emini. So certainly have that on my radar tomorrow, and it's good because I'd like to have a nice early shot in the arm tomorrow morning to get these markets moving so we can get our trades early and get out of there early. Enjoy the Friday afternoon. It is OPEX, so we do expect to see with options expiring, we do expect there to be an uptick in volatility. So got some pretty high hopes for tomorrow. We always seem to find a way to have a good day in our trade room on a Friday morning. Last few summertime Fridays have been really, really good in our trade room. So looking forward to a good day with you guys tomorrow morning. Speaking of the trade room, don't forget, I would love to have you there trading right along with us. We open up every morning at 8 o'clock Eastern time. I will drop the membership links you guys need below this video, either a button below the video tonight on the trading blog, or I'll put a link in the description of the YouTube video. Grab that link and don't miss tomorrow morning and every morning's trading session. Let's get back to those charts though. Now you guys know what's on the schedule for tomorrow. S&P, Nasdaq, and gold are ready. Don't forget, I'm going to put some chapters at the bottom of this video, right? I'm going to put some chapters at the bottom of this video. So if you want to watch all of them, some of them, you can move around as much as you want. So grab those chapters if you have a favorite market. I'm going to jump into the S&P first, though. Probably my favorite market out of all of these markets is the S&P 500. It is the most consistent, it's the most liquid, and I think it's the easiest to trade out of all of them. Gold will be a close second place here for me. But nonetheless, though, what's the most important takeaway right now on the S&P 500? There's a couple big clues on this. First of all, we saw that strong shot down into a trading range. The market, of course, chopped around inside that range, and we pretty much spent the morning in our trade room buying low, selling high, buying low, selling high, right, and trading that rotation. Well, you can see what happened, right? The market then shoots lower with just a monster open loop move. Open loops, by the way, are strong moves in the market. You'll learn a lot more terminology in our video classes here at School of Trade. So open loop, nice strong move down. The sellers are going to want to retest that low, most likely here tomorrow, and they'll probably use this range as a key level of resistance to do it. We do see quite a few examples of this where you'll see a strong shot down into a trading range. The market will shoot below the range and then almost as if to come back and almost use that range, right, as resistance. That is what is likely here going to play out unless something changes, right? The personality of this market in the overnight session. So we definitely can see that range kind of trying to act as a level of resistance. There's a big bullseye right on that low. You can also see I've marked up the low of these two lows here up around those highs, and it just looks like a great spot there, right, for a short off the high of that channel. So you'll notice the measured move is on there. Take the size of the breakout leg. The size of a range breakout leg is what you're going to use for the measured move. It doesn't push you very much further, right, through that low. So be aware there will be quite a bit of support at that low here. I want to get short. To be honest, I don't care what direction I trade in. It doesn't really matter to me. But it looks like right now the bears have control of this market right now. If I wanted to sell short on this market, what's my problem? My problem is momentum. We have a great location on this, right? At resistance, I mean, just a fantastic location. My problem, though, is you can see the buyers do have their hooks in this thing right now. Anytime we have a bear market and then we see that 1, 2, 3 reversal off of that low, you can pretty much bet on the fact the buyers are going to be trying to buy that first pullback right off of that low. And that's pretty much where we are right now. So it's crunch time right now for those buyers. The buyers have to really show up right now, or else, again, there's a good chance this market will kind of ease its way back down to retest the low. Couple short trades I'd like to look for here as the market goes lower. I think my favorite short trade for tomorrow would be what we call a 2-try failure. Because the buyers have their hooks in this thing, let the buyers try once, let them try twice, and then see if I can get that trap right above that high. It's a pretty simple idea, right? The buyers have the edge in momentum. I give them a couple tries, right, to get long. You expect that. One way I can sell it is a trap off the high. Another way I can sell it is to draw a trend line off that low, trend line off that high, and sell that trend line. If none of that sets up, I can always drop a sell order in and sell right into those stop losses, because after all, if you're a buyer and you get stopped out, what happens? You are forced to sell your position to get out of that, right? So at that point, you have the sellers who are selling, and you also have buyers who are selling. Target, of course, is down at that retest of that low. Now, we may not get this in the form of a failure. The market may just simply run lower. It may give us a shallow pullback, a lower low in price, and a trap. This would be probably my second favorite short trade if we go lower here. And again, keep in mind too, we can mark up that low. I can mark up that high. This channel would not be required, but it certainly doesn't hurt to add another layer of resistance for that short. Just make sure you get in that short before you go back down to retest that low, right? We wouldn't want to be taking that short all the way right at that low. Now, I will say, if the market was to fall apart here tomorrow and really start to run lower, I would certainly look for that trap, right? If we saw an incredible amount of strength running lower here. You know what I mean? Like if we really tumbled here, I would definitely grab that no matter where it is, just because if you have that much momentum, you're going to probably get that trap high to work for you no matter what. So we got some good shorts, right, as we go lower here. And again, targets are that low. I get that 22.85 or 22 3/4. And then there's a big round number and a big wide open space down to that 4,300. So got some pretty good targets there waiting down below. Would love to sell that 2-try failure. Now, I mentioned earlier, as the market goes higher here. Oh, I almost forgot one more thing. If we do end up back at these lows right now, can I buy that low? Can I buy that? I definitely can. Because at that point now, the buyers will have kind of closed their loop, if you will, right? We call these open loops, strong move down. If we retest that low, we kind of close the loop, right? In quotes, close the loop. Now, can I buy that? I definitely can. But I have to look for an exhaustion pattern now. And the 2-try rule works great for that. Let the bears try once. Let the bears try twice. And at that point, I can buy off that trend line, I can buy into stop losses, and I can buy back up. These exhaustion reversals, right? We saw a couple of great examples of those around the edges, right, of this range today, both long and short. If there's one kind of setup that I would say every new trader needs to learn, it's an exhaustion reversal or a 2-try failure. I'm not going to go over a lot of the small details, a lot of variations of that pattern we cover, but we do cover all that stuff in our Quick Start class. We have a great shortcut course here at School of Trade to kind of bring you up to speed with how we find levels of support and resistance, the entry setups that we're going to use, right? I don't use indicators in my trading. I just trade off price action because price action is the only non-lagging indicator. I teach all my favorite price action setups as part of that that quick start class as well. So if you're looking for a way to shortcut, kind of getting up to speed, right, and starting seeing consistency in your trading, definitely grab that quick start class. I'll put a link up there for you in the upper right-hand corner. And again, that is definitely something that we'll cover in the quick start class, right, is we'll talk about kind of how to trade those 1, 2, right, again, those kind of 2-try failures, exhaustion failures, right, going back up into that, potentially into that range here for tomorrow. So we'll see if we can get one of those right off the low here for tomorrow as well. What if we go higher here? What if we go higher? If we can go higher here, remember this range will act like a magnet. I've got a level of resistance you can see, trying to draw that. There you go. Level of resistance there up above the top of that range. Now, if we get up into that area of resistance, this is a great place to get short, right? You're at resistance above a trading range. The range below you acts like a magnet. Great spot to get short. What's my problem though? Momentum, right? Momentum is the problem. So how do you deal with momentum in a bullish environment, but you want to sell? You got to wait for exhaustion. So you wait for that price to go up. You wait for it to take out those highs, right? If my drawing tool will allow me to draw it there. We wait now for those buyers to come in and let them try a couple times, right? Let them try once, let them try twice, and then again we can sell, right, going back down. Now, some food for thought on this. If the buyers fail, this will be a dramatic failure of what we call a pendulum swing, the amount we go below, the amount we go above. If the buyers fail and this market comes crashing back down again, which by the way would be a fantastic short for us tomorrow morning in our trade room, right? Buyers once, buyers twice. Again, there's a lot of variations. There's like a half dozen different variations of that exhaustion failure. I'm just covering the basics right now. I cover a lot more of those details in that quick start class, but hopefully we'll get that 2-try failure off the high. A lot of times you can grab a new trend line off that low, a trend line off that high, and we can short off the high of that channel. This is a really common kind of combination price action setup. It's an exhaustion reversal, right? Exhaustion failure, 2-try failure into that first pullback, right, off the high of that channel. Now, keep in mind, this is a 6,000 tick chart, right? I'm not going to trade off a 6,000 tick chart. That would be a little bit ridiculous. I'm going to drill down to a faster time frame, and I'll be looking for 2 specific types of price action setups. One of them is called a trap, and the other is called a failure. Okay, these are the 2 most common. I teach 4 of them in that quick start class I mentioned earlier. So that short off the high, again, if you've taken the quick start class, you know, right? Bull trap, buyer failure. If you haven't taken that class yet, a lot of this is a foreign language to you. Definitely grab that link in the upper right-hand corner. But failure, right, into first pullback, that would be about as good as we could possibly get it tomorrow. Get it pop up, failure, and then grab that first pullback and trade that rotation right back down again. I know by now that people are wondering, well, at what point can we buy this? At what point can we buy this? We can buy this as soon as we see this market punch and hold, right? There's a couple ways that I could do it. First of all, let's say we jump up, we take out those highs, the buyers come in, they hold that pullback, and they go. Right, this is a 1, 2, 3 breakaway move that confirms momentum. We haven't seen that happen yet. We've seen a couple promising attempts, strong move up, but they couldn't hold the pullback. Strong move up, couldn't hold the pullback. Can they hold the pullback tomorrow? That's the question, right? So can we get up above the range? Can the buyers come in and hold that pullback and go? If they can, that 1, 2, 3 breakout move now confirms this range is no longer the magnet. And we'll now go back to that range where we spent the first half of this week. So how do we trade that reversal though? Mark up that high, mark up that low, drill down to a faster time frame, and we're looking for, in this case, it'd be a bear trap, not a bull trap, and a seller failure setup as we come back around the moving average. Again, I'm not gonna go to all those details right now. I do cover that right in the quick start class. So as we run higher, 1, 2, 3. Buy that first pullback off the low of that channel. Then another one of my favorites, if this market really starts to rip, right? If it really starts to race higher here, keep an eye on that trend line. Oh, if I can get this thing to draw up here real quickly here for us. There we go. Keep an eye on that trend line, and we might get one of those two-try traps right around that trend line, right? These are really powerful setups, one of the most common we've seen lately. If I can get above, in all honesty, this does not need to be right on top of that trend line, but that's kind of the first thing that comes to mind here when I look at this market running higher, right? If we do see it really blast going up, look for that shallow pullback, that higher high in price, right? In this case, a bear trap. Very, very common when you get a strong move, right, going higher here. Where would our targets be as we go up? Targets, of course, back up into that big range overhead. And if this really starts going gangbusters, I've got the 84.5 up there, right? Is that the all-time highs? Yep, all-time highs. They're 84. Yep, 84.5. I would be impressed. I wouldn't be surprised. Nothing surprises me in these markets anymore. For the last 10 years, nothing surprises me anymore. But I'd be pretty impressed if the buyers came in and were able to buy this big dip and really rip this thing back up to all-time highs. But I would think, though, it's reasonable for that 43.70 area here for tomorrow. So now you guys have a good idea of my favorite trades. Remember, if we do get stuck inside this range, just sit right on those hands, and we'll know more tomorrow morning once we get our hands in this stuff tomorrow morning in our trade room. Let's keep going here. S&P looks great. How about some Nasdaq? Nasdaq is very similar, right? Nasdaq is very similar. Nasdaq is, I would say, the Nasdaq has a little more potential for the buyers, but not by much. And that's because they don't have that big kind of breakaway move like the S&P does, right? The S&P has that big, strong move down, which is just begging to be shorted into. The Nasdaq doesn't really have that, right? Doesn't mean we can't trade it short. It just means we got to be a little more careful and kind of pick our spots a little bit here. What's the key takeaway right now on the Nasdaq? The Nasdaq pretty much just kind of rolled lower. You could probably say this is a wedge, right, going lower there. Pretty much just a risk-off, what they call a risk-off day on the Nasdaq. The Nasdaq kind of, people, of course, liquidating positions, taking profit off, right, all-time highs. So Nasdaq pushes lower. You can see it made, right, one leg, two leg going lower. And it looks like that was pretty much what the market was trying to do, right? Trying to finish off a measured move in ABCD going lower. I think the most important clue, though, we can easily see we're bearish. I don't think you need my help to know that. Probably the most important clue right now is this range. And the range is not that easy to see at first glance, right? The S&P range is pretty obvious. This one's not as obvious. You can see how they kind of roll around, right, back and forth inside that range. What is really a very kind of interesting clue about this, and we saw something very similar to this on the S&P this morning, because when the S&P came crashing down, it actually popped back up, right, into a trading range. And so the way that we traded the S&P today is pretty much the way you would want to trade this Nasdaq for tomorrow, and that is we've got those bears in, we've got the range, we've got the range right in the middle. So you would think here, with the range being a magnet, you would think here that with the bears in control, we may see a retest of that low, which again is not technically an open loop like we saw on the S&P. A retest of that low. Again, we can buy off of that low, trade that rotation all the way back, and then sell it back down again. Right? So we've got that move lower. I can wait for it to go up and short back down again. I can wait for it to go up and break out and reverse. Okay, we'll talk about these obviously. I can look for it to roll lower and then exhaustion, right? Buy off that low and then literally sell off that high, right? Like the S&P today. Or we can make that run and trade the breakout, right? There's lots of ways we can trade this market here for tomorrow. Let's play the upside first. The range, of course, the range is the big variable. I mark up the amount we go below the range. We put that above the range, right? That's going to create basically kind of the line in the sand right there, that pendulum swing at 48, 49, let's call it. I also, of course, you can see here, have this channel, right? And that channel creates an interesting level of resistance, which you'll notice is not all the way up, right, into that pendulum swing. So that channel, of course, is anchored off that big high, right? So as we go higher here, there are really two places that come to mind. One is this location right there, right? The other one, of course, is going to be this location on that pendulum swing. So as we go higher, I want to sell into this, right? I'm going to use that range as a magnet. What's my concern? It's not location, it's momentum. There are usually two variables. It's either going to be location or it's going to be momentum. Before I take any trade, I always kind of ask those. Well, we have a series of rules we follow in all of our trading in our trade room. But whenever I'm about to take a trade or I'm qualifying a trade, I always ask, how is my location and how is my momentum? If we're bearish, I want to sell. The location would be at a level of resistance, in this case, above the range, right? So location's great on that one. But what is not so great is momentum. Now, momentum is important for short-term traders. If I was a long-term trader, I wouldn't be so worried about short-term momentum. But as a short-term trader, as somebody who takes a lot of pride in using a small stop loss, right? I take a lot of pride in that. In fact, I help a lot of my clients start with small stops, low risk, high reward opportunity. Momentum is short-term momentum, right? Not long-term trend. Short-term momentum, the last couple hours of price action. Momentum is really the most important factor in being able to use small stops and time your entries effectively. And what I mean by that is as we go higher, I find myself in a great location. But all of that momentum now tells me the buyers are probably going to put up a little bit of a fight here. So if I want to get short on this, it would be in my best interest to wait for the buyers to try a couple times rather than just simply trying to sell the top. Because how many times have I tried to short that top, right? I short the top, and then what happens? My stop goes above the high, and the buyers come in, they buy the pullback, they stop me out, and then they come right back down again, right? This of course has probably happened to you. It's happened pretty much everybody. It's why trading is not as easy as it looks, right? It's not just sell at resistance. It is sell at resistance, right? Location's important, but as we go higher here and all that momentum swings now, I now have to think about, okay, the buyers have a lot of momentum. And again, this could be right here, it could be right here, but the best way to short this thing is to let those buyers exhaust. Let them try a couple times. And again, there are lots of variations of this particular kind of exhaustion setup, right? This exhaustion reversal. Lots of variations. I'm not going to cover all those right now. I do cover all the variations in the quick start class, like I mentioned earlier. So make sure you grab that link in the upper right-hand corner. That failure into first pullback is really a great trade. In fact, just at the S&P, this would probably be the best possible. So this is probably the best possible short we can get tomorrow, right? So you wait for that pop up, let the buyers try once, let them try twice. Now we know all their stops are sitting right above those lows, right? Can I sell the trend line? Can I sell the stops? Most important thing though is that first pullback, right? This is a 4,000 tick chart. You can see in the upper left-hand corner. I'm not going to short this of a 4,000 tick chart. That would be almost insane on the Nasdaq. Be a huge stop loss. Get a smaller stop loss, drill down to a faster time frame. And again, the two most common entries off those highs are traps and failures. Again, those are only two of the four that I teach in that quick start class, but those are the most common as we come off the high of that channel. Target, of course, now, right, is down at that low. Again, this could happen here, 1, 2. It could happen here, 1, 2. Now, as we go higher here, what would a breakout look like? What would convince me these buyers have taken control? It wouldn't take much. It wouldn't take much because as we slingshot off of that low, if the buyers hold the pullback, we're done being bearish, right? So if we run higher, the market pulls back, they hold that pullback and jump. That's called what? 1, 2, 3 reversal. Now remember, just getting a strong pullback is not enough. We see a lot of strong pullbacks, right, in a bear market that fail. That's why I like to look for those failure setups to sell it back down again. If the buyers hold it though, good for them. Now we know 1, 2, 3 reversal, 1, 2, 3 breakout, mark the high, mark the low. And just before, drill down to a faster time frame. Grab that first pullback off the low. 1, 2, 3 breakout, 1, 2, 3 reversal into hidden channel pullback. First test is always the best test. If we were to just rip, right? If the market was to rip higher, right? Big green candle, if we start really ripping higher, At that point, momentum will be too strong, right? And the buyers will have too much obvious control of this. If it rips higher here, strong move up, shallow pullback, higher high in price, traps, baby, right? Traps, baby. Always, always, always. If the market rips higher, right? If it rips higher, watch that trap below. We see a lot of these, right? We see a lot of these. Strong move down, shallow pullback, lower low in price, right? Trap, back going lower again. Strong move up. Shallow pullback, higher high in price, right? Trap low, trap high, right? These patterns happen over and over again. And again, don't waste your time on indicators. Indicators are going to waste your time. They'll get you in too late, get you in too low. The only indicator you need is this moving average. And again, go over all the details you'll need to get this stuff set up properly in our quick start class. So now you kind of know, right? Now you know how to buy this thing and sell it. Targets overhead, 14,922. 14,922 is that big, juicy range middle from earlier on in the week here. But again, be very careful as the market pops up. Be very careful buying too soon because it will likely end up back into that range if those buyers can't hold. Again, don't forget, stay out of the middle. Right? Middle of the range is never a good place to be trading unless, of course, we go up and then come crashing back down. I will have no problem selling somewhere in the middle of that range if we can get that momentum to swing right back in the opposite direction. But as far as sitting here and going sideways, save your bullets, right? Save your bullets. How do we trade it going short? How do we trade going short? My favorite entry going short would be a strong move down, a shallow pullback, a lower low in price, and a trap, right? That would definitely be my favorite trade going short here. Okay, the key is going to be, though, getting that initial strong leg down, that shallow pullback, that lower low in price, and that trap high. The market may also make a strong leg down, go all the way to that low, pull back to the moving average, then jump off the moving average. What does that do? That's a range breakout, right? That range overhead now is bye-bye. Now we mark up that low, we mark up that high, we drill down to a faster time frame, and we find one of those 4 price action setups I talk about in our quick start class, right? And again, you can find that link in the upper right-hand corner of this video. Where's my target as we try to go lower here? There's a bunch of levels down bottom here, right? You get that 660 area, you get the 560 area. You know, the market kind of fell out of bed today, so we may not see it go that much further tomorrow, but I'll tell you, that 660, that 660 area looks to be an easy place to put some targets. If we continue, right, that 560 level is the next area on our radar for tomorrow. Can we buy this low? Can I buy this low? You absolutely can. You absolutely can. What is kind of interesting about this chart is there is a measured move overshoot. Right? Measured move overshoot. Now, what that means to me is that, let's say, for example, we go back, right, and we take out that low. And then let's just say, for example, the sellers try to sell it and they hold, right? They hold that low. Okay? They come in, they hold that measured move. What that basically does, it confirms that measured move is still there as support. Now, we know at that point the bears have control. Right? The bears have all of the momentum, but I'm at an area of support. I'm seeing the bears hold, the buyers, hold that measured move level. Now, that's one try. Wait for a second try, right? Wait for that second try. Wait for that second try, buying off that trend line. Wait for that second try, buying off that trap even better, right? There's 1, there's 2. I'm buying that trend line, right? I'm buying that trap. The only thing you got to be careful about with these reversal trades is when you get the bounce and it goes something like this, right? That trend line is too steep. You're not going to want to buy it like that, right? There's a very big difference. You can tell, right? There's a very big difference between 1, 2, right, and buying that trend line because you're buying nice and low at that point, right? I'm buying pretty low. Relatively speaking, I'm buying pretty low. It's a big difference between that one and this one. Right? 1, see that? And it's a huge difference. That one, you don't want that, right? You don't want that. What usually happens is, I don't want to waste too much of your time here. What usually happens, though, is if you get one of those, if it goes 1, 2 like that, is there'll usually be, again, you don't want to buy that steep trend line. What'll usually happen is there'll usually be another channel, mark off that high, mark off that low, grab that trap, this is obviously more advanced, and we'll do this tomorrow together, but that's the same, same basic idea there. The key, the big thing I want to make sure you're aware of, though, is you don't want to take those reversals if that trend line is really steep, right? Really steep, because then you're not buying low anymore, right? Then you're buying high. Does that make sense? Is that a light bulb kind of going off there? Give me a thumbs up, right? Drop me some feedback in the comments section. Let me know if that makes sense. I'd love to hear from you guys, especially if you're watching this late in this video. So that's some food for thought there on that bounce or that reversal off of that low. I'm sure there will be a couple setups that I missed here on the S&P and the Nasdaq, but we'll definitely fill in the blanks tomorrow morning in our trade room. But at least now you know some of my favorites here and some things to kind of stay out of trouble with here on the Eminis. How about some gold? How about the yellow metal right now? What do we know about the gold here? On the gold futures, what do we got going on right now? Well, we are bullish. I think that is pretty easy to see. We are range bound, right? Which is also, I think, relatively easy to see. The buyers, and I've talked about this the last couple of days, the buyers continue to show they are well in control of this market. And one really good example of that is we're making higher highs, we're making higher lows. That's one kind of easy, giveaway. But kind of one of the more interesting giveaways in this is you'll notice how the market made a move higher here today. If you measure the amount above the range and project that back down below the range, you see what happened here? They should have completed that rotation. So this is what we call a failed rotation, a failed pendulum. That really says a lot about these bulls, right? The buyers are clearly doing a very good job at defending these bears. Now, there's another kind of a piece of that, because if the buyers were able to hold this, if they were able to, again, defend away from that pendulum swing, if the market was to roll over now and go lower, this really does not look good for the bears at all. For the buyers at all. Because now what's going to happen is now there'll be a trend line coming down overhead. Now you've got all of that momentum now. The buyers who look like the star, now they're going to fail. So I'll tell you, if there's one really cool trade for tomorrow, it's this kind of situation right here. Right? We see the buyers have, again, they've held off the sellers, but if they can't get this thing, you get that high right there. If this thing rolls over, I'll tell you, this thing could really accelerate and make a nice strong run down. That might be the best kind of possible trade here for us as we go into tomorrow. So buyers, again, are showing their kind of dominance on this market. Now, if they can keep this party going, we've got some levels overhead here on the gold, right? I've got that trend line you can see. That is probably going to be the best place to sell off the high, obviously. And it would also be kind of a line in the sand here for long trades, right? Breakout trades. I've also got this range up top, right? That 45.7, 47.8. This has been on our radar for a long time. So 45.7, 47.8. That area is definitely an objective if these bulls can hold this. If the bears can take control, we've been talking about this range, right? That 1804 range. That range below us, right, from earlier on in July is just begging to be retested. So as you can imagine, if we were to go up and fail here and come crashing back down, it doesn't seem likely tomorrow because of that situation right now. It does seem like gold should should continue to go higher here with the pandemic still reeling and things like that. But I trade the chart, right? Don't trade what you think, right? Trade what you see. So if we roll over, I will definitely look and short it. It doesn't seem likely, but that is definitely something I'm looking for here tomorrow. So how do we buy it? How do we sell it? I've given you guys some general ideas of kind of what's playing into this right now. As we go higher here, the best thing to do as we go higher here, you've got the high, you've got resistance, you've got the range overhead. Remember those two questions. As we go higher here, what's my problem? Location's great for a short, right? Location's fantastic for a short. Okay, what's my problem? Momentum. Yeah, momentum is my problem. So what I'll do is I'll use that to try failure, 1 and 2. And again, because you've got all of this open space below you, don't even hesitate to grab that new channel and trade that rotation. That's about as good as it's going to get for tomorrow, selling off that high. right? Now remember, we're on a 1500 tick chart right now. I'm going to drill down, right, and find those entries on a faster time frame. Drill down to find the entries right off that channel. But we go up, buyers try a couple times. Their stops are sitting right below that low. We're shorting the stops. We're shorting that pullback, right? And again, we'll drill down to a faster time frame to pull the trigger on that tomorrow morning in our trade room. Now, as we go higher, how do we buy this thing? Right? We may see it pop up, it may hold that pullback, and we may see a jump. Right? If that's the case, wonderful. Mark up that new high, mark up that low, drill down to a faster time frame, right? Buy that first pullback. Maybe we get lucky and that first pullback comes in off the top of that kind of expanding triangle, if you will. Right? That'd be great. Again, my favorites up there will be bear traps, right, and seller failures, right? Again, on a faster time frame, those price action setups. So looking for that breakout going higher. Another one would be that 2-try breakout, right? Strong breakout higher, markets on a tear, shallow pullback, higher high in price. Again, if we see something that really rips and runs higher, shallow pullback will drive the buyers crazy. The higher high sets up the trap, and now all we got to do is wait for that pullback, right, and get that trap. Sometimes what happens is the market will go and grind, right? It won't give you that pullback. If it goes and grinds like this is a little more advanced, obviously, but traps are always going to be your best option. Right? So if you're getting frustrated by it, it's not pulling back. Trust me, once you get that little trap on there, that will usually be bought right back up again. The key is don't just jump in and buy high, because you know what's going to happen, right? The markets have a sick sense of humor like that. Once you jump in and buy high is the minute they're going to pull back and stop you out with that trap and then rip right higher without you. So looking for some longs there as we go. What if we run lower here, right? What if we run lower? I think the biggest challenge as we go lower is I'd like to see some momentum. Right? There definitely could be a little bit of a channel coming in here, and we may see it pull back and bears once and bears twice. This is a pretty tough place to want to buy. It really is, because you got that range below you. It's a tough spot. To be a seller right now, I would want to see us either roll lower, and we talked about this already, right? We got that failure rolling over there, right? So we roll lower, shallow pullback, lower low in price, trap high, right? Once again, that will be a great trade going lower. Don't forget, grab that low, grab that high. Not required, but certainly not a bad thing for that. Again, that 2-try trap as we roll lower. And then where do we think that target might be? The easy target here is that pendulum swing. But honestly, if this thing rolls over like that, it would be very tempting tomorrow. If the price action, the personality is decent, is just toss that final target down to that range we talked about and just trail that stop, because this thing could really collapse here and really run if it does roll over. One more thing too would be we take out that low, we move lower, we hold that pullback, and we really jump, right? At that point, don't hesitate. Mark that low, mark that high, drill down to your faster time frame, and there's your short, right, off that high. Don't even worry about that being into that pendulum swing. Right? Don't even worry about it at that point, right? That's where we think the market wants to go. But if we have enough, again, momentum running lower, it's not going to be able to stop that freight train. Now, it may not keep going forever, right? It may just simply double bottom. You know what I mean? Like, we see that a lot, where you'll go into a level of support, you'll have all of that momentum. You drill down to your faster time frame, grab your bull trap, grab your buyer failure price action entry, short that top. You're not going for a home run, right? Find that 1-to-1 first target, take some profit off at that low, leave that runner. We don't need to get a home run on it, right? Just want to put some skin in the game because that momentum is so strong. I'm going to go over more of the trade management details, right? How I manage stops and targets. I go over more of that stuff again in that quick start class, right? That shortcut course that I talk about in the upper right-hand corner. Now, can we buy this? That's the big question, right? If the market was to roll lower, can I buy that? Be very careful. Be very careful, because if it rolls over, what you're probably going to be best off doing, and we'll know more once we get there, is waiting for a seller like me to come in and short it. And then once you have that strong move and that retest, then go out and watch for the exhaustion. Watch for the 1, watch for the 2, right? Bear strike twice, find that trend line, find that trap, right? Buy that failure, and again, into that first pullback. We've talked about this quite a bit already, right? So this, of course, over and over again, right? So again, that's kind of how I would buy it as we go lower. Because of that massive failure, again, like I said earlier, I will be looking to short that, right? I will be looking for if we have enough momentum, right, going lower. So let those bears take that low out and then go looking for that exhaustion, that 2-try failure, and buy it right back up from there, right? Failure into pullback from there. So again, lots of great opportunities on our radar for tomorrow. Tomorrow's OPEX Friday. It's a summertime Friday, so again, get there early. I'm really anxious to see how these retail sales are going to come out tomorrow morning at 8:30 Eastern Time. And as always, I hope I'll see you there, right there, trading right along with you tomorrow morning. Don't forget, we open up the trade room every morning, Monday through Friday, 8 o'clock Eastern Time. I'll put all the information you guys need to get registered right below this video on our blog or in the description of this YouTube video. If you have any questions, don't be afraid to call the office. I'm always here. We got live chat on the left, live chat on the right. You can always drop those questions in the comment section below, and I hope by now you've at least hit that like button for me and subscribe to our YouTube channel, because as you can see, I'm not playing around on this video. My job is to get you ready for battle tomorrow. Hopefully I did my job well tonight. If you enjoyed it, come back and see us again in our next video newsletter, and most importantly, hope I'll see you tomorrow morning at the opening bell in our trade room. Guys, my name is Joseph. Thank you so much for tuning in. Be well out there. Be nice to each other. If I don't see you tomorrow morning in the trade room, have a fantastic weekend. Wear that sunblock, right? Wear that sunblock, and I'll see you guys right same time, same place tomorrow. Adios, amigos. Bye-bye for now.